Every year, fraud costs citizens and companies alike billions of dollars. Joining us now for more on those costs and what can be done to rein them in, here's Edward Nagel. He is a forensic accountant and a principal and founder of Nagel & Associates, and we're happy to have you here at TVO tonight.
Thanks very much, Steve. Appreciate it.
We do need to establish your credentials off the top.
Okay.
And you wear your credentials quite marvelously, I have to say.
Thank you, I do.
Tina, will you zoom in? Let's just put this up if we can. These are the cufflinks that this man wears. There's the nice, I'm an accountant, okay, and trust me. Okay, so we're going to trust you for the next 15 minutes that all of the information you're about to give us is accurate.
Fantastic.
Okay, here we go. Is there any way of knowing just how much money is lost to the Canadian economy because of fraud?
Well, I think, Steve, it depends on who you ask. If you were to pose that question to a Big Four accounting firm, they would tell you that 1/3 of Canadian companies were victimized by economic crime during the review period. If, on the other hand, you were to pose that question to the certified general accountants, they'll tell you that fraud in Canada is a $3.2 billion problem. And then if you were able to ask that same question to Association of Certified Fraud Examiners, they'll actually tell you that companies should expect to lose approximately 5% of their revenue to fraud. So 1/3 of Canadian companies, $3.2 billion annually, and 5% of revenue. Regardless of which one of those metrics you rely on, fraud is a significant problem in Canada, and in my opinion, is a growing one.
Do you have are you partial to one of those three scenarios in particular?
I would say that 3.2 billion is a pretty accurate figure. I mean, it's a significant issue.
When you get called in, what type of fraud are you generally examining?
Well, there are two main types of frauds out there, Steve. One is misappropriation of assets, which is the theft of assets, which has the concealment element added to it. And then there's fraudulent financial reporting, which is misrepresentation of financial results. I would say the former is more common rather than the latter, that being misappropriation of assets. And the common schemes that I would tend to see out there are payroll fraud, accounts payable and procurement fraud, and then expense reimbursement. So with payroll fraud is the most common source of accounting fraud and theft. It occurs in about 1/3 of companies.
How does it work?
So you've got an individual who's the payroll administrator, and their role is to essentially go in, enter the information provided to them, perhaps by the departments, to a software online or internal within the company. They then pay that salary every 2 weeks to the individuals. Now, in this case, the person has some sort of personal financial problems, or perhaps greed is in play here. And they decide to add on a ghost or fictitious employee to the payroll. And they start paying that every 2 weeks. And the person who is likely a beneficiary of that is either a friend or acquaintance or somebody who controls that bank account. Because today, most banks, or payroll rather, are done on a direct deposit basis. And payroll frauds generally tend to occur over a period of 2 or 3 years before getting caught. So it's quite a significant expense. And the fact is, most companies have 2/3 of their expenditures going out through payroll almost on a biweekly or more frequent basis. So it provides ample opportunity for people to hide employees, particularly within a large organization.
How about procurement? How would you fix that up if you wanted to be nasty?
So take, for example, an individual who's sitting within a procurement function. Their job is to go out and procure assets or services, purchase assets or services on behalf of the company. And what they will do is they will set up a fictitious vendor within the vendor master file. But then you have to actually start paying that vendor. So what they'll do is actually create fictitious invoices, submit them to accounts payable, and approve them. And generally what happens, Steve, is that they will actually have a $5,000 approval limit. And all the invoices that are fictitious inherently will be below that $5,000 limit in order to prevent other people from getting involved in that scheme.
Edward, here's what I don't get. In both of those examples you just gave, there's a paper trail a mile long and a mile wide, and the paper trail points directly to the obvious suspect. So why do people think they can get away with this?
It's a great question. When you think about it from the standpoint of resources, my short answer to that question is complacency. You've got organizations I've come across out there that have significant corporate governance. They've got policies and procedures governing every process within their organization. And they've got maps and flowcharts indicating every transaction within each accounting cycle. But when it comes down to it, if that accounts payable administrator or employee who's looking at that transaction does not notice that this is a fictitious or ghost vendor, if you will, they notice that it's been approved by a person with the authority, with that limit, and they're going to process that invoice.
Is it hard to pick up on a dummy account?
It is, it is. Now let's compound that problem by now taking an accounts payable department that was previously 4 employees and now let's reduce that down to 3 or 2. So what used to be the job of 4 individuals has to now be crammed into 2, and the company's growing on the top line by 20 or 30% per year. So now you've got 2 people or 3 people left to do the same job that 3 or 4 used to do. Mm-hmm. What's inherently going to happen is they're going to have to cut back somewhere. And it's usually in the checks and balances, looking at whether or not that's a fictitious vendor or a real one. And I've had cases where a vendor was actually changed from its name to Inc. and changed to Corp. And slight change like that would not necessarily be noticed unless somebody is trained and regularly informed that this is a real risk within the organization.
Is it actually more expensive to police this within your organization than it is to just accept that a little bit of fraud is going to be part of the way you do business, and that's just the way it is?
And in fact, that's what many organizations do. They say, if we're going to have to choose between operations on the one side and risk management on the other, operations is generating revenue for us, risk management isn't. Let's cut back on the risk management side, and the loss is just going to be accepted as part of the cost of doing business.
So at the end of the day, is it actually relatively easy to get away with this?
Well, I wouldn't say it's easy, but if you've got a person who's got a senior trusted position, and trust is, of course, a main factor
as
here.
As the cufflinks say.
As it would suggest, that's right. That is, the person takes advantage of that. And they take advantage of that somebody is not checking what they're doing. So for example, with expenses, somebody were to submit an improper expense. So say they submitted a receipt and they changed the amount on their expense report and it wasn't caught. That error could inherently drive that particular individual to say, you know what, nobody's catching on. Let me do this again, see what happens. And it goes through the second time, and this time it doesn't get caught. Or take, for example, that executive who gets a check requisition from accounts payable 3 months ahead of travel. And they use that money to purchase airfare. 3 months later, they conduct their travel and submit their expense report, which is now actually reimbursed by the payroll department. But they forget to offset that expense claim by the amount advanced to them 3 months earlier. Because these two departments are not together, unless somebody's actually checking this and verifying it, they could get away with it.
Motive. In your experience, do people do this more because they're sinking under debt and they need more money? Or is it just out and out greed and they want to live the high life?
Well, Steve, certainly the primary motive is greed. But of course, there are other motives out there, such as financial need driven by a gambling and alcohol addiction. Perhaps there's undue family pressure that they need additional money. Another spouse has lost their job. Children need extra care. And all of those factors can contribute to someone crossing over that ethical boundary.
Let's get some insight into your life. You're in your office, somebody calls. They say, we need a forensic accountant to come in here and scrub the books because we're concerned about A, B, and C, all the things you've just mentioned. Okay, you get into action. What do you do now?
Well, the very first step is to understand the allegations. We're dealing with people's lives, their reputations. We have to ensure we don't jump to conclusions. So typically, most frauds are identified through tips. That's the number one mechanism through which fraud is uncovered, and surveys have confirmed that. So we take a look at that source, and we try to develop, based on that source, a fraud theory. And that is the theory against which we're going to investigate. The second step is to then assemble a team. That team typically comprises a forensic accountant, possibly computer forensic practitioners if we expect there's going to be electronic evidence to search and seize, and very often lawyers. And lawyers are involved in forensic investigations because we want to ensure that our work product is protected under what is called solicitor-client privilege.
It's already sounding expensive.
It is, and it can be, but if it's managed properly, there can be a cost-benefit to ensure that it does not exceed costs relative to the client's needs.
What kind of businesses call you in?
A variety. I mean, anything from private sector to not-for-profit, charities, public sector.
Governments ever call you in?
Governments do as well, all levels of government, including corporations that are running condos. The other area that I tend to find people need help in is in matrimonial disputes, where there is suspicion of misrepresentation of income, assets, or both. And as a result of that, people would like a forensic accountant to come in and uncover their spouse's financial dealings.
So this is interesting. In the case of a marriage breakup, one spouse might hire you to investigate potential financial improprieties in the other spouse, Now that's getting sticky, isn't it?
It does. It does get sticky, but ultimately we still follow the same fundamental rules in terms of conducting the investigation. And at that point, what we're dealing with is collection of evidence and preservation of evidence. And that includes preserving electronic evidence, if there is any, cell phones, computers, hardware. And in fact, most investigations that we get involved with will actually go into the office at night after employees have actually gone home, and we know that based on past card activity that we look at. And with permission from the client, we'll go in, search the individual's workstation, take a forensic image of their hard drive, and bring that hard drive back to our lab and analyze that. In the meantime, the employee may not be necessarily aware that they're actually under investigation, and that's the way we want to keep it.
What's the most significant punishment that your investigations have ever led to?
Certainly criminal charges and restitution by way of civil remedies as well.
But have people gone to jail because of work you've done?
Not to my knowledge, no. Most of the cases I get involved with, it's interesting you ask that, because many organizations don't want the bad PR that emanates from a fraud case. So many organizations don't actually tend to proceed even with civil or criminal remedies if they're able to recover the funds that were misappropriated by their employees. So if they come up with a deal or they're able to recover those funds, they may not proceed with litigation. They may not even proceed with any kind of criminal charges, but they'll terminate the employee with cause.
This may be too Hollywood a kind of a question, but you are dealing, I presume, your investigations are of desperate people who have a lot at stake if they get caught.
Absolutely.
And I can imagine that some people at some point might come to you and say, what's it going to cost me to make this, to make you turn away, or if you expose me here, I'm going to blow your brains out, or something like that. Have you ever experienced anything like that?
Certainly I've had concerns over comments that have been made to me with respect to findings that have been surfacing from our investigations and the implications. No, not as yet, and hopefully, knock on wood, that will continue. But people, obviously, what we do is fact-finding. And our purpose is to come to the table, produce the information for the client, and allow the client to ultimately make the decision as to how they want to proceed with this individual. But inherently, I'm not being called in situations where organizations don't suspect something. It's where they do suspect, and they probably have fairly good sense that something's going on. And in most cases where we substantiate those fraud allegations, those individuals are being terminated with cause. And that could have huge implications in terms of loss of severance, loss of future employability, and even potentially implications in terms of current roles and future roles that they may take on.
So in our last couple of minutes here, let's just figure out what you would recommend companies, governments, non-government organizations, charities, etc. What do you recommend people do to try to lessen and or eliminate fraud?
I think you have to deal with the issue I mentioned earlier, that is complacency. You've got to remind people that trust is not internal control. It is an ongoing risk within their organization, and you have to remind people of such. One of the areas that I get involved with is anti-fraud training. And the purpose of that is to reinforce the perception that I believe, which is prevention rather than detection, is the best deterrent against fraud. And so if you train people to identify these indicators or red flags of fraud, you not only increase the likelihood those employees are going to be able to identify those indicators, you also deter would-be fraudsters from engaging in illicit activity, because now they know everybody around them has been trained in fraud prevention.
Do you find that those who do this, some of them just like the thrill of trying to get away with something?
Absolutely, absolutely. There is a certain factor like that, ego, challenge, opportunity that causes people to do this. But majority would be driven by greed or some financial need, because the implications, the potential ramifications, if caught, are significant.
But if the numbers you gave us off the top are accurate, we have no reason to dispute them, there are way more people getting away with this than getting caught, right? So chances are, if you want to commit fraud, you're probably going to get away with it.
There is a possibility. I have come across many organizations where individuals have actually left the organization long after they've actually discovered it, the scheme. And the only reason why they discovered it was because the person got sloppy and left an invoice in their desk. So many people do get away with it, and the challenge for organizations is that if they don't pursue civil or criminal remedies, that person inherently is going to go on and probably reoffend. And about 95 or 96% of those who commit fraud do tend to reoffend.
Interesting. Edward Nagel, it's really good of you to come to TVO tonight and share your expertise on this with us. Thanks so much.
Thanks very much, Steve. Pleasure to be on the show.
Support Ontario's public television. Donate at tvo.org.